Hey everyone, so it's raining here in Columbus, Ohio, and I wanted to just talk real quickly about what the Fed did recently with rates. So, as expected, the Fed did raise rates uh, in the month of February, which did not really affect home mortgages this time around. You see, they started to raise rates in March, and they're still continuing to raise short-term interest rates. But now, what does short-term interest rates typically affect? Well, it affects the price at which banks can lend to one another. So how do you make money when you are unable to receive that money cheaply from other banks? In fact, you were receiving money from other banks at 0% at one point, right? So now in order to borrow money, it costs you so much more. So instead of borrowing money from another bank at 6.5% or even 7%, they're raising the price of money, that the interest that they will receive from us. So instead of receiving 1% or 2%, we're now getting 3.75, even 4%, depending on the company, right? So as you can see, the banks would rather pay the U.S. consumer a little bit more than to pay a lot more to the other banks just to borrow money. So whoever has cash right now can effectively just lend that money to another bank for a significant profit. So let's say someone is scared of the economy right now and they do not want to put their money in the banks. A bank is going to need a certain amount of reserves, so they're going to be forced to borrow that from a bank that has a great consumer morale and a great ability to show that they won't default or they won't lose their money. And so they'll be able to lend that money out to that bank that's in need at 7%, whereas they're only paying you 3.75. So banks essentially are having the easiest job in making money by simply just holding on to yours and lending it out to another bank. And this time around, the short-term interest rates did not affect home mortgage rates. And here's why. So when people are saying it did not affect home mortgage rates, I think it did, because we were down to 6.1%, and now home mortgage rates at the time that I'm making this video is up to 6.5%. So it went up about 0.4, but because we've already been at 7.1, they're saying, most people are saying that it didn't really have an effect on the rates that we're seeing now. I think it did. I think that it was already priced into the market. You see, I used to work for Chase as a home lending advisor, and we would price into the market some adjustments, and then if we overpriced the market, we would then lower it down. So when you see the rates get dropped down a bit instead of staying very high, is because they overshot and now they're going back down to normal levels in order to, account for everything that's going on within the economy and be fairly priced in order to be competitive. And so there might be 2-3 price adjustments in a day, depending on if you overshot or if you undershot. And so right now, because mortgage rates are typically 15 and 30 years, banks are not considering that as short-term interest rates. And honestly, they want to get loans done. They want to continue to be proactive. They want to get as much share, get as much business as possible. They want to keep their people productive. They want to ensure that they are maximizing their labor, maximizing their force, maximizing all of the cash that they have available. And so they want to ensure that they are being safe and yet very effective in how they operate and how they try to lend out money. So short-term interest rates are not going to have a big effect moving forward. I do not see mortgage rates going over, I would say, as I've said before in previous videos, I've never seen it going over 11%, but I think a hard line is being drawn now. 11% seems very, very high. And yes, we all know in 2008 where it was at 17%. But of course, housing prices were not anywhere near today's prices. They were like $70,000, and today's prices are over $460,000. So it's absolutely not a comparison. But at 11%, I think you would price out almost the entire population outside of the top 5% of earners. And so I do see a lot of withdrawal coming very, very soon. With that being said, if you like this video, make sure you leave a like, comment, and subscribe. You know I post every single day at 8 a.m. daily, and I can't wait to see you on the next one. Peace.